Hi. Really expensive Dell laptop.
Order, and welcome to this afternoon session of the Treasury Select Committee and our inquiry into are the UK's Russian financial sanctions working. Can I start by asking our witnesses to introduce themselves, starting with yourself, Mike?
Yeah, sure. My name is Mike Miller. I work for the Institute of Chartered Accountants in England and Wales, and I'm the Economic Crime Manager, mainly focusing on policy aspects and providing guidance and advice to our members, as opposed to the other half of ICAEW, which is responsible for supervisory and regulatory enforcement.
Thank you.
Thank you,
Neil.
Hi, I'm Neil Whiley. I'm the Director of Sanctions and Export Controls at UK Finance, which is the banking trade body for the UK, and we cover the whole gamut of sanctions and export controls.
Thank you very much, and you've already submitted written evidence, and you're here really representing how your two important sectors of our economy are dealing with these sanctions on Russia. So I'm just going to ask you a big, straightforward, open-ended question to start with then. Neil, how are things working from the perspective of your sector?
I think from the perspective of the finance sector, we're operating globally, so UK sanctions are one of the many jurisdictions that we have to take into account. We see a lot of work with G7 Plus in attempts to align, which is something that we encourage. But when you try and impose these kind of measures against an economy the size of Russia, it's really complex, and the volumes are showing where the framework wasn't really ready for that kind of capacity that people needed to have in place.
Did that mean you made mistakes in your sector?
I think everybody's been making mistakes, government, academia, industry. Hopefully we're all learning from them and not repeating them too frequently.
And statistically, can you share with us some statistics on how many times you've made mistakes in your area?
I wouldn't know how many times people have made mistakes, but we have seen from the OFSI annual report how many cases that they're investigating. So these are where people have reported themselves to OFSI. Obviously, there's those that don't report. We don't get sight of what's going on there.
Okay, same big open-ended question to yourself, Mike. How is your industry evaluating these sanctions?
Sure. So I think, as opposed to the banking sector, which has had quite a lot of these people in place and these resources in place originally, there was quite a steep learning curve from the accountancy sector. There was a lot of diversion of resources to compliance-related efforts. And I think the overall effect, because things were introduced so quickly, and helpfully we worked a lot with government to be able to express this back to our members. Some of our members are large multinationals, so they have to adhere to various different sanctions regimes. Some only apply to the UK. The smaller firms tend to have very limited exposure to Russian clients that would fall under the sanctions. However, the larger ones have had more complex things to take on. I think the general approach has been one that is very risk-averse. We've seen a lot of divestment from clients, and a lot of this was due to the legislation originally perhaps being difficult to interpret. Some of the guidance was a little bit challenging, and a lot of the feedback was to seek legal advice. And I think people took the lowest common denominator of essentially trying to get rid of any clients associated with Russia that could affect their business.
So it sounds like you've sort of erred on the side of caution. The banking industry has acknowledged that there have been a few mistakes in terms of implementation. What about yourselves?
Yeah, I think it's different, because if you're looking at transactions, it's happening all the time, whereas in accountancy we have the benefit of retrospective looking, because we'll be looking at money or transactions or whatever we're auditing or offering services to that has already taken place. So when we do client due diligence, we can already see if that person has been sanctioned, and then we can appropriately respond. Whereas in banking, I won't speak for Neil, but if somebody goes onto the sanctions list on a Friday afternoon, perhaps it's much easier for a mistake to be made if they're not immediately added.
And are any of your members still doing any business in Russia, as far as you're aware?
There is a limited amount of exposure, I think, from some of the larger clients to not to Russian firms, but to UK firms or international firms that have subsidiaries in Russia. There are a few larger businesses that haven't been able to divest. And you'll be aware there are quite a lot of European companies, particularly, that have quite a lot of funds stuck in Russia.
Are they taking on new business?
Currently, not that I'm aware of, but I'm very happy to check and come back to you.
Thank you. If you could clarify
Certainly.
that. What about yourself, Neil, in terms of the finance sector? Are you still having members operate there?
There are still some banks operating in Russia, but as Mike pointed out, there are other corporates in Russia that have assets that are currently stuck. If the banks leave, those assets are never going to be repatriated. So we need some banking.
Are they frozen there in your members' accounts?
Getting funds out of Russia is very difficult because they clearly don't want us to remove our funding and close down our businesses. So they're making it very difficult now to close down businesses in Russia. And pretty much the last people out will be the banks because they need to make sure that those assets are exited from Russia in as clean a way as possible.
The majority of your members are still operating there?
Not the majority, no. There's only a handful of banks that operate in Russia, and that's historic. Not every bank operates in every jurisdiction. And we have to remember that for 30 years we were encouraged to operate in and around Russia.
And so none of the banks that were operating in Russia have moved out of Russia then?
Some have. Yep.
Some have.
Some are in the process of moving out. Some need to delay that a little longer because of their customer base that's trying to exit, and they want to make sure that they can get out as well.
Hey, I mean, on the question of whether the sanctions that are working, Mike, I noticed in your evidence that you say that as a result of the sanctions, political and economic flows appear to have shifted to other overseas jurisdictions. Is this other overseas jurisdictions where your members are also operating? Are you just lamenting that lost business, or are you seeing other jurisdictions, really benefit from these sanctions?
I think it's a little bit of everything. In terms of the movement of funds, and you'll have seen it quite a lot as being reported in the media, that the more restrictions come, the more other financial jurisdictions, for particular, in the Russian case, places like Dubai, have become very much a focus.
Say places like Dubai, can you list other places?
In terms of finance and in terms of trade, if you look at Central Asia, these countries also benefit, obviously, movement through China and other countries that you would now term the global south. So the focus for where investment, I guess, of both sovereign assets, so central bank assets, the majority of which are in Europe and Belgium, but in terms of personal assets, for example, those of the oligarchs, I think we will not have sight of those asset movements anymore.
Are your members moving to where that business is, or are they declining?
No, some of our larger members will have a presence in places like Dubai, and some of them have businesses over there, but I don't think there's any movement to try to take up that business from UK-based members. Okay. From a financial crime point of view, and from an anti-money laundering point of view, the concern we have is we have less visibility of where these transactions come from, the source of funds, where they're ultimately going. And so it's more difficult to make a decision essentially on the viability of a transaction and where the funds have come from.
You can rule out any of your members who will not do business with a sanctioned entity here in the UK doing the same business in another jurisdiction. That's not happening as far as you're aware.
Not as far as I'm aware, and I think there are still the different sanctions regimes that need to be adhered to overseas. For example, a UK headquartered business doing business in whatever jurisdiction, including those in the US and the EU, tend to have to follow all three sanctions regimes at the same time. So we have over 11,000 members. I can't rule out the fact that something has happened, but as far as I know, they would adhere to the same sanctions regimes that have been put on their headquartered companies.
Do they feel the moral imperative to do that?
Very much. I think there has been a real push, and there has been some challenge with understanding some of the legislation, especially for smaller members who don't have the resources to employ lawyers or political specialists or whatever it might be. but there is a distinct desire for them to do the right thing. And a lot of the work we've done with government is to say, okay, we're not trying to get out of doing these sanctions. We want to put them down in a way that actually works for business and can be implemented successfully. So, yeah.
Neil, what about your members? Are they following the money and going and doing the business that they can't do here elsewhere?
Most of any UK bank has to adhere to UK sanctions globally. Section 21 of SAMLA makes that absolutely clear. It's the same for European banks, American banks, and that's the majority of the members that we have here in London. So wherever they're operating globally, and just to give you an idea of the scale, at UK Finance we track 111 jurisdictions that are either imposing or targets of sanctions or export controls. So, and that's because our members are operating in those jurisdictions, and we need to make them aware of any prohibitions or goods restrictions that there may be. And they're all bound by their own domestic legislation that operates internationally in the same way that SAMLA does. So they would be breaking their own laws and then subject to fines from OFAC or the EU or OFSI.
Right. Anne-Marie.
Thank you. Mr. Whiley, can I ask you a little bit more about the impact of all of this on your members? Because your members are having to implement financial sanctions, monitor their clients to do their best to make sure that they are complying, and also to implement trade sanctions. Are we asking too much, and is there anything the government could do to support you and your members better to enable you to comply?
I think the thing I would flag is, according to some research that LexisNexis did recently, industry is spending £34.2 billion a year to fight financial crime, and that is apparently 75% of the Department of Defence budget in the UK. So that's every single year, and it's a staggering amount of money, and you would expect a much bigger result for that amount of money being spent to fight financial crime. The reason why it's not as effective as it could be is because they're all doing this individually, because we don't have the provision to share data amongst ourselves, to talk with our peers, to collate that data and share it with government easily, for government to then look at what the real issues are and share that back out with industry. And we're not working as a collective. We hear this team sport mantra all the time, and we do see it in pockets, but we're not working as a whole society to use the resources that we have effectively to target the people that we're aiming our sanctions at. And I think we've got a long way to go, but we've got a lot of intel, we've got a lot of experience, we've got a lot of resource. We just need to use that in a sensible way, and at the moment we're not really doing that.
And is that because the systems and the protocols aren't there and no one's taking the lead, or is it because there's legislation, data protection, which actually stops you cooperating in a way that would work?
It's because there is, so in money laundering world, under POCA section 333C, you can share data with your peers for money laundering reasons. We don't have an equivalent for sanctions. And it's this blocker that means that when there's a new designation, 500 banks in London have to repeat the same investigation rather than 2 or 3 then sharing it with government and it being reflected back out. And then we might get onto it later, ownership and control is very complicated. And when we see government mentioning that they believe corporates are owned or controlled in the other information about an individual that's designated, why are they not added to the list in the same way that they do in the US? It's these disparities that cause undue workload that we could easily minimise and then allow those resources to be more effective, which would then hopefully have a much better impact on the targets that we're trying to change the behaviour of.
Are there any particular areas of weakness, for example, when we're looking at cryptocurrency or some of your smaller financial institutions which clearly don't have the setup that the bigger brothers do?
So clearly the smaller the institution or corporate entity, the less people they're going to have dedicated to any particular function. So you may find that in financial crime that person may be covering more than one discipline. There are pros and cons of that. One, they get a more holistic view across the different financial crime areas, and you know, most people would argue you can't commit just money laundering or just fraud. There's always touch points on others. So there might be a little bit of benefit there in having a more whole system view, but this person's on their own possibly, maybe only in a team of two. And the workloads that we've seen post-Russia is a near 400% uplift in customer screening and a near 300% uplift in transaction screening. If they were already working at 90% capacity, that's not sustainable. So these guys need help, and this is where we need the whole society approach to try and lessen the workload for everybody. We need government to help us with more considered listings so that we don't have to dig into corporate structures. If we already know their own, just tell everybody. And then in terms of areas like cryptocurrency, that is an area that's sometimes hidden from the banking sector because we only see it when it pops back up to become a fiat currency, and where it's going over different channels of crypto, we may be totally unsighted. So we may only see funds disappearing and then popping up, and we don't know if they're the same funds or if they've been split or if they're being combined. And then when you look at products like Tornado, which looks to obfuscate all of that and make it even more complex to understand who owns those particular crypto funds. These are tools that are being used for the reason that they weren't put in place for, which has always been the case, unfortunately. But I think what people are seeing is the traditional banking sector's pretty good at spotting nefarious actors, so they're moving to other areas where they're out of sight of the industrial kind of machinery that we have to look for sanctions.
So what is it that we could do in addition to current steps to try to reduce the flow of finance and funds to Russia? And what can we do with regard to some of the, if you like, indirect exports to Russia of our proxies, Kazakhstan, etc., etc.?
I think there's probably three things that we need to do. One is to work with those countries to say that, yes, it's great that your exports of this to Russia have gone up, but these aren't good products that are going to Russia. Everyone else is saying this product shouldn't go to Russia. You shouldn't take advantage of a gap in the market and try and fill it with products that we're trying to suppress. We should be looking at the companies, and there are Western companies involved, and you heard from Tom Keating at RUSI, he's absolutely right. Manufacturers are not afraid of sanctions because they never get targeted, but they are shipping their products, and sometimes in increased volumes, to hop-off countries, so places like the Stans, Turkey, in reasonable knowledge that it's not the destination that it's been shipped to. It's going to go on to another country. And sometimes it doesn't just go Kazakhstan, Russia. It might bounce around a few different countries, so it becomes a bit more difficult for them to spot it. But the problem is it's not illegal currently for them to ship that product. There's no prohibition in the UK to say you can't ship that to Kazakhstan because we don't have the same kind of measures against Kazakhstan because they're not invading Ukraine. So it's very difficult. So we have to do the political discussions with the country to say, play the game. We have to do the same with our own industry sector and say, if you're seeing this is a red flag, surely. You must be thinking this doesn't look right. And then wherever the banks can see these patterns, they can start reporting that, saying, no, hang on a minute, this exporter's exports of this product to this region has gone up. It looks perfectly legal because there's nothing stopping us from doing this, but it looks suspicious because of the rise that they've had. And if we can work together, then maybe we can figure out who's behind it, because there are people benefiting from getting products that shouldn't be getting to Russia.
Thank you very much, Anne-Marie. Samantha.
Thank you, Chair. The Chair mentioned earlier about the economic flows shifting to other jurisdictions. And Mike, I just wanted to ask you, have you identified a loss of business and revenue for UK businesses as a result of the sanctions?
I think the most direct example we can give is the risk-averse approach that was taken, so probably legitimate business that, considering the sanctions, could have continued, hasn't continued from the UK with people connected with Russia. And there is also the people will approach smaller firms, particularly now, say if they are Russian clients or their clients connected with Russia, and because the smaller firms maybe don't have the resources to get the inevitably very expensive legal advice that you need to get to give yourself reassurance that you can go ahead with the business, then that would be a direct loss to the UK. I think the point is more general, and it's more commenting on the trend of flow from. It's inevitable that Russian money is now not good, that did flow in the last 2 decades into London, is not going to flow in now. That's part of the sanctions, which is perfectly fine. But if there are other measures taken, for example, we may discuss confiscation of assets or whatever it might be later, that further essentially gave that message to other countries that there may be a lack of safety for their assets within the UK, then I would say that could have an effect of moving some business away from the UK.
And in your written evidence, you know that some businesses in the UK that are reliant on Russian funds face liquidation as a result of the sanctions. How widespread was that problem?
This was very much in the start of the invasion, when a lot of particularly smaller businesses that don't have a lot of cash reserves were relying on essentially 1 or 2 key customers that had either been directly or indirectly affected by the sanctions, and they weren't able to make their payments. So there was a licensing request put into OFSI at the start so that those payments could be made, but that took quite a long time to be granted, and I think there's quite a few businesses went.
Any idea?
I'd have to double check exactly how many, because I'm not just talking around in the accountancy sector, but also accountants that were providing accountancy services to these businesses that saw them go out of business.
Neil, in your evidence to the committee, you discuss how business may face civil liabilities for dealing with an individual or an entity designated under the sanctions regime. So what impact does that have on their willingness to trade and do business, do you think?
So the SAMLA is pretty clear. You mustn't receive funds or economic benefit from, or give funds or economic benefit to, or for the benefit of a designated party. So that's pretty clear, pretty easy to understand. So most businesses, if we talk about financial services, if they see one of these people attempting to become a customer of that business, they would not adhere to that. The problem that we have with global corporates is their existing customers get sanctioned. So there it's straight asset freeze, and unfortunately that customer account is disabled. You can't close it because you can't move the frozen assets. So you have to hold on to them, and the account stays open. And we would point out it's not a crime to be sanctioned, so we need to be mindful that it's intended to change people's behaviour. So taking away their ability to transact hopefully is a trigger for their behaviour improving. I think one of the other points that we would flag is, while the G7 Plus is broadly aligned, it's not harmonised. So what we have seen is UK banks adhering to UK sanctions globally, as they are bound to under SAMLA, but they're freezing accounts of parties the UK has sanctioned in other jurisdictions where that party isn't sanctioned, and are then being sued in that country because they're not listed in that country. And this is something that we see for UK banks in Europe and US. We see US banks getting caught in Europe and the UK, and it's, as you would expect from Russians with lots of money, wherever they can sue, they're going to take people to court because it ties up resource. It's expensive. Even if you win, all those people are in court for that amount of time. And it's the flip side of where the UK goes last and others have designated, by the time we get around to it, they know they're going to be designated, the liquid assets have gone and there's nothing there for us to freeze. So this is why that harmonisation, and we appreciate it's going to be impossible to harmonise, but as close as we can get to harmonisation across T7 Plus would make a huge difference to those corporates that are operating globally.
You mentioned earlier about, and we've received evidence about the fact that businesses have had to rapidly increase their compliance teams to meet the challenges that this brings. So do you have any idea of the cost for this? What it's meant for business to increase their compliance team?
Each business will be different. So the thing I always point out is, yes, they're all banks, but the only thing they have in common is the word bank. Every bank has different customer profiles, different jurisdictions, different product lines. So they are operating differently, and they will be impacted differently by whatever measures are put in place. And just to give you an example, in the summer of 21, when there were a significant increase in sanctions against Belarus, we had some members that had zero impact, and other members that were seeing more than 1 million extra cases to work a day because of their customer base, the product lines that they had, the jurisdictions they were operating in. And it's very difficult to say that across industry this is the cost for every single company, but what we do know is that across our members, so some will be worse than these numbers, but some will be lower. The FTE resource had to go up by 268%. So if you take 500 banks across London, but if you take the other financial institutions into consideration, you're approaching 900 institutions, on average having to uplift by 268%. That's a significant resource that they're paying for. And this is where you can see the 34.2 billion a year can easily be reached.
Mm. And you talked about the capacity of small businesses to deal with this, and touched a little bit on what kind of support that they would need. I mean, do you want to expand on what you think that could be done to support them in their compliance?
So, sorry, can I just give a little... Sure. So the problem for all businesses, big or small, is the scale of what they're facing. Now, for a large business, you might have resource that you can pull in from other areas and give you some surge, a bit like Treasury did with people coming in from other departments to help those guys out. Because this isn't industry only, this is everybody. Obviously, we're in exactly the same position as the banks. There just wasn't enough experienced people around to bring in to help cope with what was happening because of Russia. And just to give you some indication of how big this was, there are 36 regimes plus 3 pseudo-sanctions regimes in the UK framework. In 2022, 30 of those changed, including Russia. In January 22, the Russia statutory instrument was 65 pages. I had a look today, it's 502 pages. So if you're a small firm where it's part of your job, not your whole job, and you might be the person doing other things, you can't even read 502 pages of just Russia to understand what the changes are, let alone the other 35 pure sanctions regimes, and keep on top of those and be sure that you're not breaching Syria or Iran because you're spending all your time concentrating on Russia. And it's back to the make the listings really clear, make the legislation really clear and easy to follow, because it's more cost effective that way. And unfortunately, we write quite difficult to interpret legislation. As Mike said earlier, when we approach government for clarification, quite often the response we get is seek legal advice. And I know that when we seek legal advice, we'll speak to 3 different law firms because we want to make sure that we're getting a good spread of legal advice. They'll come back with 3 different answers. So even they can't agree on what the legislation means. So we need, if we want this to work, it has to be clear, easy to follow. We used to have a good law project in the UK until it was shut down, which is a bit of a shame really, because they may have been able to help us just tidy up some of the wording that's in the law. And for those that are writing the legislation to understand that London is a major global centre, we have to think globally when we're writing our legislation. Don't just do it as if you're working in the UK and it's a UK-centric piece of legislation, because we've seen too frequently that catches out those that are operating internationally but are bound by UK law because that's their home country or they're UK citizens.
Mm-hmm. Mike, would you add anything else?
Yeah, just to throw in we have a slightly different approach because we don't have to actively monitor transactions like the banking sector, but just to touch on your first point around the increasing compliance costs, I think for the larger firms, we've seen that go up. They maybe had 1 or 2 dedicated sanctions people. Now they've maybe got a handful more, 5, 6, 7, 8. So they've also pushed some of the compliance staff that have worked in other areas to work on sanctions. But the main comment we have from them in terms of increased resources is how much they have to pay law firms now, in terms of tens into the hundreds of thousands of pounds to try to get legal advice for what they should do. We had a big issue, which we might touch on later, around the prohibition of auditing services to Russia because they were very different in the way they were applied from the US and the EU. So it brought quite a lot of legal complications.
So this is legal advice to interpret what's coming from us?
Coming from legislation, exactly. And then after that from either statutory or non-statutory guidance that's produced by the department. And that would lead to my last point, particularly for smaller firms, clarity, as has been said, I think, clarity around these. What's the intention of the sanctions? What are they actually there for, and how best to apply them with guidance that can be used? A lot of accountancy firms are very small, and they probably don't have exposure to this, but they still need to do their client due diligence. They still want to adhere to the sanctions, and a lot of them are perhaps more concerned than they would be because they read the legislation and don't really know how to adapt to it. So we produce quite a lot of guidance particularly for smaller firms, and because we're an AML supervisor as well, we can tie this into the risk-based approach that they take for that. But I think it's really having that communication from government to say, okay, this is what we want to do, this is the best way to do it, would be very, very helpful from the outset.
Thank you. Thank you very much, Samantha. John?
Thanks, Harriet. Can I just turn to, please, the feasibility of UK, in concert with its allies, seizing Russian state assets? Not individuals, not talk about individuals here, we're talking about state assets. I mean, we've had testimony in front of the committee through sessions that there is a view that if the West, in concert, UK, US, EU, and so forth, and other allies, were to confiscate the broadly $300 billion that we believe is held in Belgium, Euroclear, and 1 or 2 other places, mostly liquid assets, that would change the whole nature of the war if it was committed to that, and certainly would help with reconstruction. I mean, for example, Bill Browder has told the committee that the UK should follow the US and legislate to provide for the seizure of assets to fund the war. If we did this in concert, what is your view? Maybe start, actually, if I may suggest, maybe start with you, Neil, given that there is a bit of a finance angle to this.
Yeah, sure. So I think lots of the evidence that you've received around this just says due process, rule of law. And I think that's the key thing that everybody is really keen that is followed. So as long as it's robust legal mechanisms that are used, I don't think anybody should have an issue with that.
Any qualms?
I think the problem people have is potentially we would look as bad as those that we're trying to target if we just start taking away assets that we've immobilised in this case.
Except we don't go invading countries.
Well, not recently.
Not recently. No, I would agree with you there, not recently. But, I mean, what's your view, Mike, very quickly?
I think the undermining and fundamental point is that it has to follow international law. And it has to have a very sound basis to do it in international law. We've built what is the international rule-based order, essentially, on following the norms of international law. And if we break that, I think there is a question about the the knock-on effect in the...
But what if I may suggest to you, if the international community, the West, come together across the board and say, we are going to do this, that, I mean, would it be your view that that would be breaking international law?
That's really a political decision.
Down to the lawyers.
Yeah, that's really a political decision as to whether they'd want to do it. I think we would stress that there would have to be that agreement between the countries, and obviously, as we've seen at the minute with the G7 plus, there is not agreement. There's some agreement between the US, Canada, and particular parts of the UK government, but the rest of the G7 plus do not seem convinced, and the EU, which is the main holder of Russian central bank assets, definitely doesn't seem convinced, and they're coming up with different ideas, whether you can use it as collateral, as a loan. But also, if I could make just one more point, I think what we would also consider is just the viability and the attractiveness of UK and Western capital markets. And we've seen quite a lot of surplus-heavy countries, for example, those based in the Gulf, Saudi Arabia, China, Indonesia, but also some in the global south, as we'd say now, that have lobbied fairly heavily against the G7 because they're concerned that if they fall foul of falling out with Washington or London in the future, that potentially they get their assets seized. So I think you'd have to do it in a way that doesn't damage FDI into the UK, which obviously we want to attract and make UK open for business.
But if countries, if the West and Global South were able to agree that this is an extraordinary set of circumstances, an invasion of a sovereign country, and they could coalesce around that view that perhaps this does justify seizure of those assets, confiscation and so forth, because, you know, the Ukraine's been waiting for $60 billion aid package, which Ukraine believes is going to make a fundamental difference. Well, $300 billion would make a very big difference as well. And what I'm suggesting to you is that if the West could agree, then surely the justification is there, is it not? Neil.
I don't think anyone has a disagreement with the spirit of what's trying to be achieved. It's just concerns around making sure we follow international law, due process, and we don't leave ourselves open to litigation.
Got it. But you have no evidence to suggest that if the West was to act in concert, we would be contravening international law. You are not aware of any evidence. Yes or no?
Not a lawyer, so I have.
You don't know. Okay, fine.
No knowledge.
Let's move on. One of the reasons one of the arguments against perhaps is that it would sort of create market instability. You know, suddenly the seizure of assets. In the big scheme of things, you look at the global economy, 300 billion sounds a big figure, but actually it's manageable. Now, we've had testimony from people like Tom Katinge, director of the Centre. Yeah, thank you. Director of the Centre for Finance and Security at the RUS, saying that basically he would certainly strongly disagree with that consensus, and so would Bill Browder, that it would somehow spook the markets. Tom makes the point that the maximum point of jeopardy for market confidence is when the assets were seized or immobilized, I should say, in early 2022, and nothing happened. And that's what central bankers and the authorities are supposed to do, stabilize the markets. What's your view on that? Would it cause insurmountable instability if the assets were seized? Neil?
So, from the UK it's 22 billion. And that's not going to cause an issue to the market. My Prudential colleague assures me that liquidity coverage ratio, according to the Bank of England, for the UK is 570 billion. So 22 billion is not a significant sum for that. Would it cause issues for the institution? Yes, potentially they would need to go out to the market to shore up their liquidity, but that liquidity is there, and this is something that banks are doing every single day of the week, borrowing off of those that have got excess cash and lending when they themselves have excess cash. It's a large sum, but it's not insurmountable. And then, to your point, global trade is just under 32 trillion.
Brilliant, absolutely.
Significant uplift on that. And then in the UK, Bank of England figures are citing time deposits at 3.2 trillion.
Yeah, absolutely. So your view is, if I may suggest to you both that it would not be insurmountable, provided the central banks and the authorities stepped in. It could be managed, any instability that might follow.
Just that institution would need some help.
What about the argument, just pushing this, I'm being devil's advocate a little bit, I'd be interested in your view. What about the line that, if those assets were to be seized, that, coming back to your point, if I may, Mike, and that is that, the countries involved, people would lose confidence and might not deposit their monies there, for example. Now, my retort to that would be is that if there was a coordinated effort on this across all the major economies, Western economies and global South economies, then actually that would help solve that, because people with serious money wouldn't put their funds, their monies, their investments anywhere else that wasn't considered stable, surely. So as long as you do it in concert, you can address that issue. What do you think?
I think, again, it's a political point, but I think the challenge would be getting the concert of all of the G7, all of the EU countries, and all of the, I think even more difficult to get the global south to follow up. I mean, at the minute, there's obviously a US-led push to get the G7 to agree. I'd suggest it might be that's probably the first step, and then if you broaden it out, that's probably going to be a fairly big leap. I'm not sure how quickly that would be feasible or what the steps would need to be taken to actually achieve that. If the consensus could be achieved, then, yeah.
Time is running out, but if I may, you think that whilst I'm not naive enough to believe that every single country in the global south and the west, major economies in the west, would be able to sign up, if we got the major economies on board, starting with the US, and they're already there and so forth, and I know some jurisdictions like the EU are worried about the run on their currency, the euro, and they've said that very publicly, but if we could get some sort of concerted action, people would have no choice. In the internet, the trade flows and so forth couldn't flow to more very minor periphery countries. If there was some element of concerted action, then that would address that concern, would it not? Yes? No? Neil?
It's a political minefield.
I know it's political, but I'm asking you, actually, as experts in your respective fields, as if there is the political nous there, to get certainly a majority view on this in the international community, in the Western world, in the free world, if you like, that actually there is a logic to the argument, is there not, that where else would investors put their money if they couldn't put it in the major reserve, or the major economies that have reserve currencies, let's put it like that.
It's a fair point, and I would just say that any action carries risk, and we would need to understand the risk and weigh up whether the action...
Isn't the greater risk inaction when you have an invasion of a country, and for the lack of finance, perhaps, it could influence the result in favour of the Russians?
Yeah, I take your point, and inaction carries risk as well, and it's about understanding that risk.
Okay. Thank you very much.
Thank you, John. Angela?
Thanks very much. Do you think between you that the sanctions that have so far been put into effect have been successful?
I think it very much depends on what your definition of successful is. If we look at it from the UK's perspective, in terms of do you want to reduce the footprint that the UK has in its connection with Russia, and do you want to reduce the amount of, for example, Russian oligarch-linked money in the City of London, then certainly it has had an effect. Whether you judge it by reducing Russia's ability to wage war, then I would say it probably hasn't had much of an effect. There are certainly effective sanctions in terms of limiting components, but as we've already discussed, there are ways around that. I know the EU in their current sanctions package is looking at ways to potentially put more liability on manufacturers for if their products end up in Russia despite going through other third countries. It's changed the UK approach a lot. I think it's changed the Western approach a lot to Russia, but it's also forced other geopolitical shifts, I guess. And we've seen, for example, the ability for Russia to, I mean, this is not an accountancy specific point, but if we look at the oil cap, we've seen that working initially, and now Russia still manages to sell for above the oil cap because countries tend to have an ability to adapt, especially if they have alliances with significant countries.
What I'm hearing you say is that it was initially successful. There's now change of behaviour which is evading some of the worst parts of it, but it's been marginally successful at reducing the footprint of Russian money in London.
I think it's definitely been successful in reducing what you'd call Kremlin-linked, although that issue of control obviously is very hard to assess in Russia because of the crossover between politics and business, but certainly the amount of money that's flowing into London and to the UK from Russia will change because of this. But
we might not be called the Russian laundromat anymore, is that what you mean? Because it's still going round as far as I can see.
I think that would definitely be a hope. I think this has been a bit of a wake-up call to HMG in itself from when it first happened. There were steps taken bit by bit, particularly after the Crimea invasion in 2014, but there were very much incremental steps. I think there have been fairly significant legislative changes in the last 2 years with the 2 economic crime acts. The real issue is getting them to work on the ground and translating it into what will actually work, getting the secondary legislation through, getting the resource to sort out Companies House, getting more information flows.
It all seems to be going terribly slowly from that point of view, doesn't it?
I think it's a real challenge. I mean, Companies House, I know it's not direct to sanctions, but it is if we're talking about sanctioning entities, which can often be more effective, but you have to have viable, verifiable information about the entity that comes from that area. So, sanctions are, I think we'd say sanctions are a good tool in the short term, but if you leave them there for a long time, then people find a way to adapt.
We are going to carry on right through this vote bell. Yeah.
Mr. Whiley, do you think from UK finances' point of view that the sanctions have been successful?
I think first we have to caveat that sanctions are very complicated and a binary answer is difficult for such a complex area. If we look at the Foreign Office, deter, disrupt, demonstrate, did they deter? No. Russia invaded. Have we demonstrated that we think this is bad behaviour? I think we have, along with our G7 plus allies. We've all put in measures. Foreign secretaries have made statements in the House. Have we disrupted? I think we have. We've got good evidence that Russia are missing 400 billion that they would have had the sanctions not been in place, that would have allowed them to put that money towards funding the invasion of Ukraine. So there's some disruption there. Some of the research that we're seeing from other areas, the Ukrainians are telling us that the drones that they're shooting down now, when they dismantle them to see what components are in there, they're now much lower quality components. So the servos, the guidance systems aren't as high-tech as they were. So the quality of the munitions that Russia is firing at Ukraine are degrading. That's positive. We are seeing circumvention, but again we would highlight that circumvention carries a cost because you're having to find new trade routes, new partners. You're not just using your old, just go buy something. You're having to work around the system. And I think it's been pointed out that that was places like Turkey, UAE, the Stans. What we're seeing now is a slight reduction in those areas, and we're seeing other jurisdictions start to rise up. So it's a bit of a whack-a-mole. As we squash down one, it pops up somewhere else. And these are countries that are seeing benefit in doing particular business that might not be illegal where they're doing it, but it's where it then goes on that brings in the circumvention part of sanctions.
Yeah, I think your description of whack-a-mole is probably a good one. When Bill Browder gave evidence to us about the difference between sanctioning individuals and entities, I was pointing out that it seems to be the case that a lot of Russian oligarchs hold their money seemingly individually, but they're effectively holding it in trust for Putin. And actually there's not as much meaningful difference between an entity and an individual in a kleptocratic system like that as we might think. He said that the amount of Russian money flowing in had actually corrupted our country. Do you agree with him, Mr. Miller? Corrupted, not was corrupting, had already corrupted.
Had already corrupted. I think definitely a lot of financial services and other resources were put towards the Russian money that was coming in, that was encouraged by successive governments to come in to the City of London when we envisaged Putin as potentially opening up to the West. I don't want to say that it has been corrupted. I don't think it has been corrupted. I certainly think corruption is a challenge that more effort should be put into here to tackle. I know we're supposed to have had an updated corruption strategy published quite a long time ago, and that has been delayed. So I think there's not perhaps as much effort that goes into countering corruption here as could be, but I don't think it's fundamentally corrupt.
He pointed out that there hasn't been a single case even opened following the Majinsky fraud, which was £230 million, a lot of which was traced to Britain, which was stolen from him, and that not a single inquiry has been opened by any of our authorities, from HMRC to the National Crime Agency on down to the Serious Fraud Office on down, since Putin came to power. Not a single inquiry opened, let alone anyone convicted. Do you think that's unacceptable?
I don't think that's acceptable remotely, but that's very much from the government and from the authorities to put more resource and to put more effort to.
He also said, though, that there was what he described as an ecosystem of support for corrupt Russian money coming in and dirtying our markets in this country, of people like accountants and lawyers who were willing to take action to make it impossible to freeze some of these things because of the very, very lucrative nature of the remuneration when one's doing that. Do you agree with that?
From our point of view, from an ICAEW point of view, we have very, very strict controls in people who can be members. So chartered accountants have a lot of ethical and have a lot of compliance things that they have to go through to maintain and to be supervised, primarily for anti-money laundering purposes.
And are you convinced that all accountants operating in the City of London are clean when it comes to that? Because Bill Browder seemed to think there's an entire ecosystem, including, one would have to say, accountants,
well, there's also
helping hide some of this stuff.
There's also a challenge between an accountant and a chartered accountant. You can set yourself up as an accountant without actually having an accountancy, a membership of a professional body or whatever it might be. So there is this discrepancy. From our membership, we follow it. Yes, there will be a certain amount of bad actors, but I would say, at least from our point of view, they're very, very much in the minority, and actually
you don't need many of them to get the job done.
That's true, but we see the vast majority from our point of view really trying to apply the sanctions and really trying to work for the UK to be a good place to do clean business.
Mr. Whiley, what about banks?
So in the banking environment, banks are caught under what's called relevant firms, which has a reporting requirement, and that requirement is if you have breached or if you see other people that are designated or acting on behalf of designated people. So there's a collective reporting of intel to the regulators, and I'd point out that the most recent fine that OFSI issued against Hong Kong Wines was as a result of two banks reporting to OFSI. It wasn't Hong Kong Wines reporting themselves. So they're very keen to weed out those that are trying to circumvent UK sanctions from within the UK.
There are a lot of oligarchs with holding an awful lot of money in the British banking system, which profits are being made out of, though, aren't there? Of dubious sort of origin, let's put it that way.
That would come down to when you're onboarding a customer, the due diligence that you would do for that client or individual, source of wealth, source of funds. These are checks that have to be gone through.
But why is London known as the Russian laundromat, the London laundromat, if those kinds of checks haven't grossly failed in the last few years?
It's the largest cross-border financial centre in the world. So if you want to move money and have it go unseen, you want to be in a wood that's got millions of trees. London processes 110 billion transactions a year. To process a couple of thousand nefarious ones, it's very easy to hide in 110 billion. Not quite so easy if it's BVI or the Cayman Islands, where their transaction volumes are much lower. So that's why London is attractive to everybody that's trying to launder money.
Finally, what do you think should be done? What one or two things that if they were done, would improve our capacity to take action against some of this behaviour, but also to ensure that sanctions would be more effective? It seems to me certainly that transparency of ownership would be one. But what about other things?
This goes back to the point I made earlier about the banks are individually trying to fight sanctions because they're not allowed to discuss what they have with each other.
Okay, so sharing of data.
So an oligarch, unfortunately, isn't going to bank everything with Bank A. Anybody that is trying to circumvent or perform financial crime isn't going to be honest about the source of their funds, where their wealth came from, what companies they own, and it's the banks that have to spend all the time and effort and money to uncover this, yet when they get it wrong, they're the ones who get fined. It's not the people that are behaving badly that are getting punished, it's the banks that are trying to do their best to unearth the bad behaviour. When they fail, they get punished. The Met Police don't get sanctioned and fined if they fail to stop a crime, but the banks do, and it seems a little weird that the people that are trying their hardest get punished.
They don't seem to be interested in examining any of these crimes at all, and Bill Browder took us through some of what might be done there. But what about transparency of ownership as well as data sharing?
Transparency of ownership only goes as far as the person declaring what they own. So again, most people are going to be honest, but they're not the ones that we have a problem with. It's the people that are behaving in a egregious manner are probably not going to give us all of the right information at the time that we need it. And it's how do we unearth that and then share what we find, because it won't be one bank finding all of the information. It will be a number of them, and they've all got a different piece of the puzzle. And if you've only got one piece of the puzzle, you don't know what it is that you're looking at. But being able to talk, collate that information, and this goes across industries as well. It's not just the banks. There's the importers, the exporters, manufacturers, the shippers, consigners, accountancy firms, law firms. We all need to be part of this conversation, as do government, and we also need to be looking at some of the brilliant work that's done in academia, because if we bring it together as a whole society response to making sure that UK sanctions are effective, it will be more effective than it is today.
Sounds like we're a million miles away from that.
If I could I just add a very quick point to that? I think Neil is absolutely right, and in terms of that, having that verified data on Companies House would be very much of use, but also specifically from our point of view, from an accountancy professional body, we encourage the exchange of intelligence and the exchange of information, because we actually have disciplinary powers within ourselves that have a lower threshold than a criminal prosecution. So if law enforcement authorities do detect bad behavior by a chartered accountant, but they can't pursue it to criminal standard and therefore get a conviction against them, they can send that to us and we can investigate and launch disciplinary procedures against them, which hopefully would reduce the small amount of what you'd call enablers that are actually active under that guise. And that power is actually pretty good, but we don't make use of it as much as we should because we don't receive the information from the authorities.
Stephen.
Good afternoon. In both of your written evidence, you talk about the disparities between regimes that are in place for sanctions. And I think particularly, Mr. Murray, in your written evidence, you said that the disparity has widened since the Russian sanctions have been brought in place. And Mr. Whiley, you highlighted particular regulatory and litigation risks. Can I ask the obvious questions, I guess, therefore, is those differences, how wide are they? Do they really matter? Is unity and implementation more important? And probably, Mr. Whiley, the additional question to you is, can you highlight some of those risks so we're clear about what you're talking about?
I think from our point of view, because of the way that we process sanctions, having uniformity, particularly in the case of large multinationals where they have to essentially do business over various different sanctions regimes, it reduces the compliance burden, it reduces the amount of time taken, and it also makes it more effectual to actually be able to implement the sanctions on the ground rather than doing too much box ticking work. An example I highlight which caused quite a lot of issue for us was the prohibition of audit services, because the UK took a very different approach in the fact that if you were a UK headquartered company and you had a subsidiary in Russia, you couldn't complete a group audit because you would have to essentially get somebody based in Russia to carry out that audit and provide the information back to the headquarters, to the firm in the UK or in London. Whereas the US and EU both had carve-outs for making that. So there was a big challenge in terms of trying to understand the legal complexities around that and also the effect on the capital markets of not being able to file an audited group account, essentially. So from a strategic point of view, I think when countries announce that they're trying to essentially achieve the same political goals, then as close alignment as possible makes it much more easy to implement on the ground. With that having been said, obviously different jurisdictions have their own different legislative frameworks, they have different ways of implementing it, they have different capacities of doing so. But where, for example, in the audit case, we asked repeatedly why the government had made the decision, essentially, because it was treating, from what we could see, UK firms in a more negative way than EU were treating EU firms, US were treating US firms, which we didn't really understand how that would necessarily degrade Russia's ability. But the answer we got was, it's a political decision, and that's fine if it is, but I think communicating the rationale behind would help essentially get firms to be able to implement it quickly.
Do you regard the EU and US regimes as aligned?
No, not particularly, although there are areas where they are aligned. It looks like the EU, in its recent discussions, is going down a fairly different track on things like manufacturing, on things like access to the alternate Russian push finance system, etc. So there are certain challenges.
Mr. Whiley.
So I just echo we have to remember that every single jurisdiction has its own legal framework, and they will be different. They're not going to ever be harmonised. So that foundation, when they try and put in the prohibitions that we're trying to align on, they will come in slightly differently. And then obviously the targets are not 100% aligned, as I think you've heard in some of the other evidence sessions, particularly from Bill Browder when he was talking about the CATSA 232 list, the 98 oligarchs that the US have been not highlighting for quite some time. To give you an example of where it's been problematic, so Mike touched on Regulation 54C, which is the prohibition on business services. 54D is the prohibition on legal services. And I'd just remind you that London is a global centre for legal services. It's a global centre for banking and lots of other international parts of various economies. In the schedule, to explain what legal services are, it includes talking about the law. And then 54D prohibited anybody with a UK nexus from talking to anybody that wasn't a UK citizen about the law. So for a French bank in London, you can't talk to your headquarters in Paris because they're not UK nationals. That clearly wasn't the intention. For an American person working for an American bank in London, they can't talk to New York or Washington. They can't talk to their French colleague across Europe to say, oh, this is what we're seeing. And we're supposed to be aligning, but it's back to that bad drafting where whoever's drafting the legislation from a UK perspective is not considering London as an international centre. Yeah. And back to the way the EU and the US did it, there were carve-outs for if you're providing that legal service to yourself, i.e. your own branches or subsidiaries, that was fine. And the EU actually used the phrase, you can't provide legal services to anyone who is or is connected with Russia, which is much clearer because that was the target, not the whole of the world. And unfortunately, that was the way the UK one landed.
And when we took evidence from Mr. Bronze, who was the co-founder of Energy Aspects, he told the committee there had been lots of effort within the energy sector to harmonise sanctions, which made it more effective. Can you say, how, from your perspective, how much energy has been put into trying to harmonise or put pressure on governments to harmonise sanctions? And at the moment, what would you say to the UK government are the most significant differences which we need to overcome or we need to sort out?
From a financial services perspective, the biggest disparity that we see is the treatment of ownership and control. So in the US, their ownership is 50% or more. In the UK and the EU, it's more than 50%, so slightly different test. The US aggregate ownership, so if more than one person who's designated combined owns 50% or more of an entity, that then becomes designated. The UK doesn't. The EU does. When it comes to control, the US will list those entities that it believes that any designated person controls. The EU doesn't. You have to work out, do they control it or not? And I would argue sometimes this comes down to little more than an opinion. The UK has the same approach as the European Union, but adds strict liability on top. So now you're in a position where you reasonably believe that that isn't controlled, but that's not a defence because knowledge has been stripped out of strict liability. And if Treasury believe that actually they do, they can fine you. And it's this really complex way of introducing something that should be really simple. Ownership should be legally measurable. It shouldn't be that complicated. But when in Schedule 1 of every statutory instrument, it tells you what ownership means, and it contains at point 12, informal arrangement, whether it's legally enforceable or not. That can't be ownership. That's just not how ownership works. And this is the challenge that every international corporate with the UK nexus is struggling to get a sense of when it's not aligned with the EU completely and it's not aligned with the US. And to be fair, the EU and the US aren't aligned either. So we could do with a bit more parity across all of their approaches to ownership and control. And we do appreciate this does come down from the UN, but they don't specify how you have to implement it. So it is within the gift of the implementing nation. But we can't, as much as people would love it to be removed completely, we can't remove it because it's a UN obligation that we hold.
When we had Mr. Browder in front of us, giving evidence, he made the point, as I think I'm hearing from you actually, that the US is perhaps the most aggressive and effective in implementing and enforcement, and therefore that would be best practice. What would be the things that we should look at immediately to ensure we are complying with best practice, do you think? Is it the pursuit of enablers, for instance, which the US is already heading for, and indeed the confiscation in laws in Canada seem to be changing somewhat as well? Perhaps, I don't know, I'd like to ask both of you, but...
So if we talk about the US, normally people are referring to OFAC, so the Office of Foreign Assets Control, which is the Treasury Department that oversees financial sanctions, and then Department of Commerce tends to look after the trade-based sanctions, but there are some nuances, and it's not quite as clear-cut as we might believe, as is always the way with lots of different government departments. OFAC's quite a mature department. It's been around a long time. They've worked for a very long time with the different industries that they oversee, and they have a not perfect but a reasonable understanding of the challenges that those industries face, and they have a better dialogue with those industries to understand those industries. So anybody who works in banking that says they understand banking is not really understanding the complexities of banking. They'll know the bits they work in. To expect government to understand banking is not reasonable. They're not working in banking. But what they need to realise is they don't fully understand it. They need to talk to industry and talk to the right people in the right bits, depending on what measures they're trying to put in, to help get a better sense of what would this mean if we put this measure in. Would it cause problems for our own economy, for our own banking system? How do we get to the spirit without crippling ourselves and impacting the target as much as possible? And that's where I think OFAC are a bit stronger. In terms of enforcement, yes, they do tend to come down much harder. We'll see, so far this year, we've had $149 million in fines from OFAC, and that compares to OFSI's $20 million in total. So they've already done 7 times as much as OFSI have ever done so far this year, and we're only in May. So this is the kind of difference that we see with OFAC. But what we also see with OFAC is it's a tiny percentage of the cases that end in a fine. Lots of them will be no action or a private letter saying you must do better. Sometimes it's a disclosure notice which is public. We saw one last year for Midfirst Bank where they'd got things a little bit wrong, but OFAC deemed it wasn't as egregious as perhaps it looked at first point, and a lot of the breaches were very early on, straight after designation, where it takes a little time for the bank systems to catch up. But OFSI have got some catching up to do there. They've got OFAC people embedded, which is really positive, but then they're a young department, so we have to bear that in mind.
Do you want to add anything?
I mean, yeah, Neil makes some very good points. I'd say the US system is a lot more mature. They've been doing a lot of this for quite a number of years, and OFSI is quite new compared to it. I think it might be helpful if OFSI produced some sort of perhaps anonymized enforcement report to show, because there's been very few enforcement actions, as Neil has shown, that OFAC take a lot more of a stringent approach. And I think that it would be good to give an impression to UK businesses of where these actual enforcements are happening, where sanctions breaches are happening, just for information purposes. And just the last point to add, so obviously the US is in a very strong position to issue sanctions because of the position of the dollar as a reserve currency. No one strikes fear into the financial sector as being an international financial institution and getting sanctioned from the use of dollars. So that puts, they're also far more politically forward in this case. I think you see a lot of arguing internally within the EU, particularly because they have quite a lot of assets that are still tied up, EU businesses tied up within Russia, far more than US businesses do. So the US tends to be a bit more gung-ho, if you like, on going forward, whereas there's a bit more sort of reticence and consideration, particularly within the EU.
Very interesting. Annie?
Thanks, Jane. I'm so sorry I had to step out. So
just doing my democratic duty. So I missed probably some very helpful evidence from you, and so forgive me if I'm going to ask you to repeat points you made. And in fact, Stephen was asking about some of these same issues, so forgive me about this. But just about OFSI, could you just characterise the relationship in your sectors between business and OFSI at the moment? How would you say that relationship stands? Mike?
Our relationship will be far less because the sanctions that mainly apply to accountancy are trade sanctions. So we've been dealing a lot with Department of Business and Trade, as it were, and now we're waiting for OTSI to come into existence. We do have, obviously, exposure to OFSI, particularly through licensing, and there are occasional crossovers, but we were mainly relying on guidance from OFSI at the start of the issuing of sanctions to provide this to members, particularly smaller firms. I think that was quite slow at the start, but now has picked up as the headcount within OFSI has increased.
Okay. Neil, how do you think relations stand with your sector? And
our relations with the likes of OFSI, the FCDO, FCA, DBT are very strong. We probably see OFSI more than once a week. We're constantly meeting with them either bilaterally or as part of wider industry panels. I think we have the level of relationship with OFSI that we can fall out about something, but then carry on working together. It's that mature.
Okay,
so
well,
we have a very good relationship.
That's great. And you were just discussing OFAC there, and I was going to ask you what your sense of the comparison enforcement agencies is across the world with OFSI. I mean, is that as you said, more mature, been around longer, sort of knows what it's doing perhaps more. Do you think that's in a sense, the gold standard, or is there another model around the world that we should be looking to?
I think from a financial sanctions perspective, OFAC would be the one that you would hold up as the department that's doing the best.
Yeah.
I would probably argue that OFSI are in second spot.
Okay.
I think they're ahead of anybody that's in the European Union and certainly wider world. The thing about the European Union is it's enacted and enforced at member state level. So while the European Commission may set the policy and the listings and the prohibitions, that then has to ripple down, and it isn't as aligned as people may think. Yeah. When you look at the EU, it's 27 slightly different interpretations and slightly different timings on things coming in. So it's not as advanced.
Thank you. Just picking that up, I think it was you, or maybe it was Mike, just responding to Stephen saying that OFAC is more politically forward, more gung-ho than obviously. That's interesting. Can you just maybe unpack that a bit? And I was wanted to ask you about what accounts for the fairly poor record on enforcement. I mean, we can criticise or not, but the facts are the enforcement hasn't been a lot. Do we account for that by saying that's because their overall policy is less aggressive, or is it a question of resources? And I'd be interested in your views on the resources of OFSI. We've had previous witnesses in explaining that there's a question around not so much headcount, but the skills mix there, the capacity to deal with the complexity of the cases. Transparency International said they needed an army of forensic accountants, which they don't have. So I'm interested in your sense of whether there's a sort of policy and approach question, or a resource question, or what the mix is that would account for the poor record on enforcement.
So in terms of the legislation available to OFSI, they can impose fines of £1 million or 50% of the value of the transaction, whichever is greater. So it's not that they're capped by legislation.
A lack of power, no.
So they have the space to sort out what sort of fines they should be issuing. I think there's always been a view in industry, like the first two fines were £5,000 and then £10,000. These are very low. That isn't the kind of measures we would expect from OFAC. We would expect more in the hundreds of thousands. And if you look at some of the big fines OFAC have issued, 8.9 to BNP Paribas. Just at the end of December last year, just under $1 billion of part of the 4.5 billion that Binance got came from OFAC. Whether that's a conscious policy decision from Ofsted to be more in the educate and try and encourage space rather than just keep fining, because we have to remember the people that are going to get fined are those with the UK nexus that have reported themselves for not quite meeting the target and they're trying to do their best. It's not the people that are trying to hide stuff. It's very rarely do we find people reporting those that have not self-reported themselves. So it's maybe a double-edged sword.
So is there a question about going on to the issue of resources then, to enable obviously to actually find the real wrongdoers?
I'm not 100% sure they have the power to go and investigate themselves. I think they have the power to request information and then they act on reports that are sent to them. But I'm not sure they. And if you look at, there was an article in Politico earlier this week pointing out that Ofsted has 135 people, the NCA has 5,000. People think Ofsted has grown, but it was from a very, very small department.
Nothing, yeah. Mike, what's your sense of their capacity and expertise?
I think the recruitment has been pretty swift in the uptick, obviously from a very small amount to what we have now, or what the aim is for of 135. So that's a very positive step forward. I mean, we'd have to, I think the tie-in with law enforcement and the ability for law enforcement to investigate sanctions breaches and then pass that over to Ofsted is something that we're not cited on, but is probably a factor. And obviously we're also not cited on the policy discussions within Ofsted about how much they want to show enforcement. I agree the current amount of enforcement doesn't send a huge deterrence message, but perhaps they're more in a sit back and educate space.
Mike, can I just ask you about the point made in the evidence you submitted, or your organisation did, which was very interesting about the unintended consequences, and the suggestion you make here is that as a result of the sanctions, political and economic flows appear to have shifted to other overseas jurisdictions where we have less confidence in the controls in place to limit financial crime. Are we saying there that the unintended effect might be to push activity into areas where it's possible to potentially breach the sanctions on Russia? Are we just shifting sanctions busting elsewhere, or is it that actually we're putting money into areas where there is, as it were, common or garden financial crime happening?
I think both.
Okay.
The point, I mean, I was thinking about it particularly from a money laundering perspective, but that also ties over. If you have less visibility of the source of funds, you have less visibility of how the transactions are moved, and then you're asked to carry out work on X amount of funds. Normally, if these transactions have taken place in the West, there's at least a paper trail, and you can have relative confidence.
Do we think there might have been an increase in money laundering and in financial crime not related to Russia?
I couldn't speculate. We'll be doing inspections from our own point of view throughout the year, so obviously very happy to report if there's an uptick from that side.
Understood. Okay, last question for Neil. The general license system that enables businesses to carry on trading that would otherwise be in breach, just give us an impression of how you think that's working. I mean, the Holland and Barrett was the famous example here, where it's as if the Ofsted didn't realise that Holland and Barrett would be affected by, or the government didn't realise that there'd be a consequence for a big high street business like that. Do you think we're getting that right? Could there be improvements to that system? Do other organisations, do other countries do it better?
I think in terms of do other countries do it better? Yes, because OFAC do the listings and they do the general licenses, so they have much more sight on who is being listed, and as I mentioned earlier, if they believe there's control, they will list. If that corporate isn't listed, then there's no control element, it's an ownership criteria that you need to meet. From the UK side, it's the Foreign Office that are doing the listing. So if they're going to list Frolov and Treasury are unsighted on that, they can't issue a general licence to protect Holland and Barrett because they're owned by Letter 1, that's owned by Frolov.
Yes.
So there needs to be, and I know they are working much better together because this was very early on.
Yes.
But that joined up conduit between the lister, Foreign Office, and the implementer, Treasury, needs to be there. Otherwise, we've got these little glitches.
Okay. And that still needs to happen.
It's not happening as frequently. We haven't seen one for a very long time, to be honest. But
Thank you very much.
Thank you, Danny. Does anyone else
Most of my
want to
questions have been
ask
covered.
any further questions? Because I have a few more if they don't. Did you
No,
want
I'm
to?
fine.
You're absolutely fine. Anyone else got any further questions? I just want to ask you sort of very open-ended question again about the oil price cap. How do you feel that's working? And in particular, Neil, you spoke about some of the unintended consequences of the oil price cap. So I'm just keen to hear how it's working, but also how it could be better. Start with yourself, Mike.
Yeah, so from our perspective, we have very little exposure to
okay.
the oil price cap or implementing it. So I could give a personal
Leave
view,
that
but
to
from
Neil
ours...
then. Yeah. Neil, your views.
So I think the oil price cap followed on from the very broad prohibition on Russian oil and gas products. So a lot of the UK market exited on the back of the prohibitions. And then the oil price cap is an exception to allow them back in as long as the product is bought below the cap. But a lot of them have not gone back in because the oil price cap is not as simple as it might look. And it's also fraught with dangers. Early on there were discrepancies in the way that the G7 group were trying to apply what was oil, what was not oil, because the problem is when you get to commingling, it's very difficult to tell how much Russian oil is in there. You're not a chemist with a kit at the quayside that you can take a sample. You're just a financier many, many steps away from what's actually going on. So the tiering system was novel, and I think the framework that we've used for the oil price cap could be considered for other areas as and when that becomes a necessity. I think the unintended consequences are, and there are examples all through history where people have tried to stop something from happening, and then it's basically circumvented, and it's decided, actually, I don't need to use your services. So the Carter grain embargo on Russia, they basically just started getting their grain from South America, and then when they lifted the ban, Russia continued to get its grain from South America. So it was the Americans that lost out there. The Napoleonic blockade of the UK, we just went west and traded west. So it's exactly what's happening with the oil price cap. We're stopping UK or G7 plus insurance, shippers, consigners, financiers, accountants, lawyers working with these people unless it's below the cap. It's so complex, lots of them just not bothering. And then we're seeing shadow fleet, potentially insured, not insured vessels full of oil going around the world. I saw a report the other day about how much of that traffic comes through the Straits of Dover. Now, if they're uninsured and there's a disaster, it's going to be the UK and the French picking up the bill for that because there's no insurance to cover any spill.
So just to ask you then the obvious follow-up question, which is how would you improve things? And I don't mean just for the oil price cap, but also just for the sanctions regime generally. What more could we be doing to make these sanctions more effective? Each of your sectors.
Yeah, so I think it's about working together. If we're going to have team sport, we have to have a team sport. We can't shout at the goalkeeper because we didn't score enough goals. That's not his job. We need to work out who's got the best visibility of which piece, who can work in particular areas and make sure they're part of the conversation. There's no point having something like an oil price cap if you don't include maritime, oil and gas, insurers, because they're absolutely fundamental to that, and they were included. So that was good. It was the right people were around the table. But if you're putting in measures like ownership and control, and you've got really unreliable sources like Companies House, it's very difficult for people to work out who actually owns what. And then I don't know if you're familiar with the work that Graham Barrow does, but he does a lot of work on Companies House and how poor the checks are for people to register businesses, get the certificate online
Mickey
nearly
Mouse.
immediately. Yeah, exactly. And then they're using those certificates as proof of being incorporated in the UK to commit frauds or money laundering. And we need to be working together to stop this. And having government and industry not fully united and tied up and working together on the spirit of what is the foreign policy aim, how do we achieve that between us. And I think Bill Browder and Tom Keating both said, Russia is at war, it's on a war footing. We need to take that same mentality and think, right, this is a war. What would we do in the war? We wouldn't separate everybody into 500 different banks and say, do your own homework. We'd be working together, and this is where we need to move to.
Interesting. And Mike, for your industry?
Yeah, I support those points. I think if you have countries with similar foreign policy goals, that having that cohesion and that strategic approach to things is very useful. Then when you get below that level, having good mechanisms where you can work together. This has improved a lot in the last 2 years. It was very, very siloed when the sanctions were first announced. Now we have a lot more cross-government, cross-industry bodies. There could be more. And having that, as Neil says, that cohesion to understand that there are certain areas of the economy that can be helped by others that banking or accountancy can do more of is very important. Clarity around terminology for effective implementation, I think, is key. At the start, we have, I think, connected with Russia was the term that was used, and it was very, very difficult to define. So you had probably unintended consequences from those who didn't want to take legal advice or couldn't afford to take legal advice, penalizing essentially UK nationals with connections with Russia or something that were outside of the sanctions. So having a clear communication strategy and a clear actually what you want to achieve with this is going to be key moving forward. And to set out the aims. I mean, in the longer term, what are the aims? And how can business prepare? How can we help prepare government for the steps it may take when it has to make tough political decisions, I think is key.
Okay. So unless there are any further questions from my colleagues, I think you've given us a lot of food for thought this afternoon. Thank you very much for coming along and representing your sector's board order.
The proceeding has ended. The proceeding has ended. The proceeding has ended. The proceeding has ended.